Welcome to our monthly survey results for the Mid-American economy. That's the economy stretching from North Dakota and Minnesota in the north to Oklahoma and Arkansas in the south. I am Ernie Goss, faculty member here at Creighton University in beautiful downtown Omaha, Nebraska. Thank you for joining us today on the first business day of the month. That's the month of October. I'm reporting on the business conditions for the month of September. And folks, got a little bit weaker out there. In other words, I'll talk about that in just a moment. But this is a leading economic indicator. That's the overall number. And I'll talk a lot about the overall number. Underneath the overall number are the components of the overall number, and I'll talk about some of those as well. First off, the export orders, really new export orders push the overall number down. That would be the leading economic indicator, move lower for the month. Now it's still above growth neutral. Now the index normally, or not normally, it always ranges between 0 and 100. 50 is growth neutral. Anything above 50 is growth positive. 50 is growth neutral. Below 50 is growth negative. So the number, as I said, it moved lower, but still above growth neutral for the month of September for the businesses that we survey. The overall index moved from 57.2 in August, which is that's a pretty good number. Again, it's not like your biology test, high school test scores. 57.2, you're very, very disappointed, unless you're like me, not very good at biology. But that said, it went from 57.2, again, which is a pretty healthy number, to 54.3 for the month of September. So that's moving in the wrong direction. And why is that? Of course, we're in the middle of the ag economy. In other words, agriculture is king in these states. Of course, energy as well. And both energy and agriculture have weakened in the month of September. Now, the employment gauge, though, on the flip side, the positive number, employment gauge was up from 48.7 to 53.5. That's good. Now, wages, though, when we look at wages year over year, how much do you normally expect? Well, you probably would like to see 3-4%. We saw 1.6% in average weekly wages. That's just not good enough, folks. We need to see that number being a lot stronger. But again, 1.6 at least is, some would say it's not negative. Year-over-year job growth, 1.2%. That's for the 9 states now, 1.2%. Now, how the heck does that match up against the U.S.? That's lower than the U.S. Normally, this region has exceeded what's gone on in the U.S. Now we're moving below that. Now, again, why? Because of the agricultural economy, which has weakened, and the energy economy, which has weakened. And why have they weakened? The dollar has strengthened, making those goods less competitively priced abroad. So exports weakened a bit for the month, and we're seeing that in our survey. Agricultural commodity prices down by 30% over the last year. I should say grain prices, not all agricultural commodity prices. Beef and pork pretty strong, but grain prices, 30% decline over the year. Now that's a heck of a hit to the farm. It's going to come. We're going to see more of those impacts going forward, though. Those impacts are going to grow with these not such good numbers in agriculture. As I said, the leading economic indicator, sorry for that, falls to a still pretty healthy level. Businesses, we ask them about your health insurance. Of course, we're coming up on anniversaries for your health insurance. We're all signing up again. What do we expect in an increase for 2015? About 7.2%. Now that's not nearly as stiff as a lot of the critics of the Affordable Care Act were saying, but it's not as good as perhaps the Obama administration said. They would like to have a little slower growth. Some of the critics would like to see faster growth, I'm sure. More than 4 of 10 businesses reported increasing shipping bottlenecks. In other words, bottlenecks. Now, these businesses order raw materials and supplies. They're having difficulty getting those. That's 4 in 10. Why are they having difficulty getting these raw materials and supplies? Because of all the oil that's been shipped via rail via rail across the region. That's shipping from North Dakota. That's also shipping from Canada. We're seeing it, and there's some competition there between the farmers that want to get their corn out there, their soybean, get that shipped, and those who are shipping oil. So that's a big issue going forward. We'll see more and more of that. Inflationary pressures at the wholesale level declined for the month, still in a reasonably high range. Now, I should say moderate range, but inflationary pressures are coming down. Now, that's for an economist, you'd normally think that's okay, but the Federal Reserve is a little scared of that number. In other words, they're afraid inflation comes down to, it's now about 2% year over year. Suppose it comes down to 1%. Or is this with that? We don't want to move to Europe. We don't want our economy to move toward Europe in that way. Europe's seeing almost they're seeing disinflation, which means the inflation rate's coming down. You see deflation, meaning a negative inflation rate or prices actually dropping. That's a real problem. You could see that having a negative impact on the economy. So that's something to keep an eye on going forward. Now, what else should you watch out for going forward, at least in this economist's judgment? And this is, we at Creighton, this is sort of our consensus, the Case-Shiller Home Price Index. That number, it's just a real measure of the housing market. And the housing market's weakened a bit lately. If you haven't been watching, a lot of those numbers, they're up and down, but they are trending downward. Keep an eye on that. That's released the last Tuesday of every month. Jobs added for the month of September. If that number comes in lower than 100,000, that's a weaker economy. Watch out there. If it's over 200,000, that's bullish and very solid. Look for the economy to grow. Look for the Fed to continue to be more removing some of the stimulus they've put into the economy. If it's between 100 and 200,000, sort of neutral. Keep an eye on wage growth, and that wage growth comes out with the employment report, which comes out this Friday. So the employment report out this Friday, again, above 200,000 on the jobs, below 100,000 on the jobs, somewhat negative, above 200,000 positive. Look at the wage number, though. The wage growth there has been weak. And you don't need me to tell you that. You know when you go home and look at your paycheck, if it's like mine, not as strong as you'd like. Something, on the order of, we'd like to see it above 2%, even 3%, 3 to 4%. It's been above 2. That would be wage growth. We need to keep an eye on that. If it's below 2%, that's signaling this malaise that we've been in may continue. Risk, housing market. That's a real risk. It's not as strong as we'd like. Mortgages are down. We're seeing housing, it depends on which statistic you look at, but it's definitely trending downward to sideways. Trade embargoes, Russia. What's going on in Hong Kong? That's a real issue there, and that spills over. Of course, Hong Kong, part of China now, and of course China moves in to we won't see another Tiananmen Square, but something like that would really have a negative impact on the overall economy. Watch out for Europe moving potentially back into recession. That slows U.S. growth because we're selling goods there. Much stronger dollar, which that tends to push agricultural commodity prices down. Very important in this part of the country. We don't need them to come down even more. For example, corn is now below the break-even price. Those farmers out there that if you're cash renting now, you're losing money. Cash renting on your land, you're losing money. Of course, if you're selling at the current prices, that is. Keep an eye on the unemployment rate and participation rate moving forward. I expect the unemployment rate to continue to move lower, but the participation rate, that's the percentage of the working age population that's actually in the labor market, that's moved down. It's at record, well, I shouldn't say record, it's the lowest level since 1976, 77, when I lived in Georgia at the time. My governor, former governor, and my president at that time, Jimmy Carter, was in the White House. These are the lowest participation rates we've seen since we had President Jimmy Carter in the White House. That's it, folks. It was a pretty good report, not as strong as August. Keep an eye on all those things I just talked about. And this is Ernie Goss here at Creighton University in beautiful downtown Omaha, Nebraska, speaking on our results for the month of September. Until we meet again, that would be November the 3rd. That's the first business day of the month of November. Until we meet then, may your economic cup runneth over. Thanks.